A word of caution, whenever you're looking at price action trading strategy, it does not mean you'll be right all the time. The next topic for us is what is price action trading strategy. Now, the basic assumption in price action is market price is God or bhav bhagwan che. The current market price includes all the information at that particular point of time. What it implies is the current market price is the sum of greed, fear, aspirations and aspirations of all the market participants. Now, what are we looking at? We are looking at price and volume data. And what are we trying to understand? So there are three basic things which we are looking out for. The first one is to understand the market's behavior. The second is to look at what are the trends in the markets. And the third is to look at chart patterns and price patterns to understand how to trade it and to finally make decisions whether to buy, sell or hold. So now we go to the first part of understanding the market behavior and the trend. Now, if you look at the market behavior, there are various cycles which we are in, whether it is a bull market or a bear market. So you understand which market we are in. Then what are the three major different trends? The first one is an uptrend, which is where markets, indices, stocks are making higher tops and higher bottoms. So you basically are going from 100 to 130, back to 110, then to 150 and back to 130, 170. So this is a classical uptrend. What is a bearish trend or a downtrend, which is where you're making lower tops and lower bottom. So you're falling from 200 to 170, pulling back to 185, going back to 150 and so on and so forth. Then the last one is what we call as the sideways trend, which is where the markets are going sideways in a very tight range. Now this is a tough period, which is where there is no major trend. Now to take it in an example of Nifty, we saw a correction in 2020. The markets fell 30 to 40% really fast. So that was a downtrend. And then from March, April 2020, we got into a constructive bullish trend wherein we kept on making higher tops and higher bottoms. So we started from 7,500, went to 9,000, pulled back a little, went to 10,000, and we kept on doing this. Then from 2021 to 2022, where we topped out around 18,000 odd levels, we've been at 18,000 roughly plus minus 500 points for the last full year. And that is what we call as a sideways trend. The next we go to is chart patterns. Now there are three different types of chart patterns. The first one is called continuation patterns. The second is reversal patterns. And third is neutral patterns. Now what is a continuation pattern? This implies the stock or an index is already in a trend. And the pattern tells you this is just a pause in the trend and then it will continue. This is where pennants, flags, triangles come into picture. The second pattern is reversal patterns. Now when we look at reversal patterns, what it implies is there has been a trend. So you've been in an uptrend and then topping out, or you've been in a downtrend and then bottoming out. This is where, say, an example is a head and shoulders pattern, which is generally a topping out pattern, which is where you have a price point, the rally has continued, you make a high at 100, dip down to 80, then you make another high at 120, then you dip down to 80, then you again make another top at 100. So if you look at it, and then you are back at 80. So you have a classical head and shoulders pattern. And once this neckline breaks, it's a topping out formation and a downtrend could start. The opposite of it generally is a double bottom pattern, which we see very often, which is where basically say an index has dropped from 18,000 to 15,000, bounced back to 16,000, came back to 15,000, and then it crosses 16,000. So the intermediate high between the two patterns has been taken out. That is what is called as a start of an uptrend and a reversal of trend. The third pattern is called as neutral patterns. Now this is where basically if you look at a pattern which is where you are not clear which side the trend will blow out. So for example, you are in a sideways channel. The stock is trading between 100 to 130 and there have been multiple attempts on both the sides. So whichever side the price breaks out, that is the side of the trend which you want to be. So essentially when you're looking at the pattern, it is neutral, but when it breaks out, you get a direction. Similarly, a symmetrical triangle, which is like a compressed spring wherein you have lower tops, higher bottoms, and essentially getting into a very tight range, which will blow out in one direction. So that is where you have a neutral pattern where you wait for price action to confirm the trend. And after that, you take a call whether the trend has started or not. Now we go to the final part of when you understand price action trading. What do you want is an entry, an exit, and a stop loss. So let us take an example. Now this is a chart for Nifty which you see. This is post 2008. The markets fell. The Sensex fell from 21,000 to 8,000. The Nifty fell from 6,300 to say roughly around 2,200, 2,500. Then it went into a sideways period, which is where it kept on contracting and contracting, as you say, as you see on the chart. Then it breaks out, the volumes pick up. That's your confirmation. And then you keep a stop loss somewhere to the moving averages or to the recent lows. And that gives you a stop loss which could be either price based or moving average based. And then you buy the breakout. The target would be the size of the triangle. Say consider the Nifty was between a range of 2500 to 3300. So that's like a 800 pointer range. So a breakout would imply a 800 pointer upside. Now, the next example in front of you is somewhere in 2012, where the markets corrected. They made two exact bottoms at 4800, as you see on the chart. Intermediate high was closer to 5100, 5150. It broke out, and at that point of time, above 5150, you initiate a buy. Your stop loss is the low of that candle or a moving average, which would roughly be in between the two bottoms and the intermediate high, as you see here. Now, once this trend starts, you continue to be on the trade till the time it makes higher tops and higher bottoms. So now you get your entry, exit and stop loss and how to ride the trend. To summarize price action trading, these are the three things you are looking at. Understanding market behavior, to know which are the support and resistance levels, which we'll take in a topic in detail. Then you look at trend lines to form a chart pattern, and then you wait for a breakout or a confirmation of price action to initiate a decision of buy or sell. So, and then the last part is till the trend is up, you continue to ride it. Now, a word of caution, whenever you're looking at price action trading strategy, it does not mean you'll be right all the time. There could be false breakouts or false breakdowns, and that is the reason you have a stop loss in place. And then we look at further things to identify major trends as well as chart patterns in much more detail in coming topics.